Okay, this was a 257 pips buy trade caught on gold. Yeah, caught on gold during the Asian section, and it is a trade breakdown video of how we were able to catch that move. All right. Okay. All right. Now this was the trade. By the way, this was a previous setup cut, but never mind. These are focus for today. Now from the higher time frame, the 1 hour, basically we can see that price is in a downtrend after creating a massive double top at the zone right here. Let me mark out that zone. After creating a massive uptrend here at this region, so price basically went to create the all-time high here at this zone right here, this 4373 zone, and then from the other time frame we could see a major retracement, more like a retracement for like a continuation of the trend. They went back to test the all-time high, but didn't break out of it. The price didn't break out of the all-time high right there. Instead, price kept crashing down. Now, as price kept crashing down, you will notice that let me clone this. Okay, you would notice that as price kept crashing down, it came back to filling this this zone where it created a long wick from the previous day. From the previous move, it came back to filling this zone. And let's go down to the 15 minutes. Let's go down to the 15 minutes, and so we can have a better view of what happened. All right, now this was it. As you see here, this was a key level right here where price came down to after the first crash. Price basically crashed down. Then went back to retest the all-time high, and then created a double top pattern, and then kept crashing down again. Actually, this is a counter trend trade, but it was a really good one. Now, one thing price does from past history is the fact that when price gets to a key level, there will always be a reaction, whether to counter the trend or to reverse or to continue in the movement. So the trade we basically took was more of a retracement trade. Now this is the key level. This is the key level where price came down to, and then we basically looked for a buy opportunity from the major zone. Okay, right here. Now if you see, the setup is almost identical with our previous trade here, which did about 270 pips also, but we're not going deep into that. Setup looks identical. Now basically, from basic market structure, we could see that as price tapped into the key zone, right here, there was a retracement. So a retracement of about 300 pips. Then price came down to retest that same zone. However, it didn't create a lower low. Price closed above, price closed on the wick of the last low for that zone, and then basically wicked out the from basic market structure. We could see that price came down, the sellers tried to push the market. However, the buyers tried to push the market, not much, but then the sellers kicked in. This is an indication that buyers are trying to see to that zone. And then on the next candle that opened up, we basically opened a long position on the week close of that previous trade of the week close. Let me mark it out so that we can basically see it. Let me use the trend line to mark it out. Okay, this was it on the week, the previous trade. So that's how it is. So basically entered and then placed our stop loss below. Let me just clone this. Placed our stop at this zone. Why? Because that was where market did its first rejection. So as we put it, and then our TP was placed here. Why? Like I said earlier, this is more like a counter trend trade. So it is from the higher time frame. We are still on the retracement. So we place our TP at the the previous high, the previous lower high price created when it first reacted to the key level here. And then that's basically it. It did a wonderful this is a wonderful 1:4 trade, and then backed in 257 pips. So basically that's it. If you have any questions, you do it to drop them in the comment section below, and I will see you in the next one.